What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is December 26th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend a little bit of time to talk about the year in review for 2022. Talk about what went on during what has to be the most brutal bear market since back in 2014. And on top of that as well, look forward towards 2023 and try to see whether or not we can get a decent understanding as to what may happen this next coming year. If you guys enjoyed the video, consider dropping a like, and let's go ahead and kick off the rambling session. All right, so I want to start here by just diving into the Bitcoin price chart, because while this hasn't so far been the most brutal bear market in total percentage decline, it is by far, when it comes to market cap, been the biggest decline, and I think on a structural basis has been one of the most painful bear markets since as far back as 2014 with the collapse of Mt. Gox, or Magic the Gathering online exchange. It used to be the biggest Bitcoin exchange out there on the market, and with its hack back in 2014, this completely disrupted the industry and left us in one of the most painful bear markets, long drawn out bear markets in its history. So now that we understand we've gone through all this pain, we've gone through a ton of restructuring, Celsius, FTX, BlockFi, a dozen crypto companies or more that are leading industry players have gone under. A lot of people got margin called. We had Three Arrows Capital, Luna collapsing to zero practically. We had all of these major players in the space getting knocked out, and still lots of contagion still playing out. And putting that aside here, I want to say that overall, while it has been brutal here, we are starting to get towards the later chapter here, where we can start to find a low. We have filtered out a lot of the bad actors that are going to long-term set back the space if we don't get rid of them, if they don't get flushed out. And I think that this is a very good stone, or a stepping stone essentially, for crypto to eventually become a mature industry. But I need to be very realistic with you all. As much as I'm here to note the positive, I will do that. You guys know I'm a long-term bull. I believe the number goes up and to the right long-term. The case in point we need to understand is that this is going to leave a scar on this industry for a very, very long time. Doesn't benefit me to say that here. I run a channel that's mainly focused on crypto. We benefit ourselves here, though, because we do dive into the macros we will talk about through the video. But case in point, this is going to leave distrust in the industry for a very long time. And I think you're starting to see this within price and market order flow. You can see this again, as we've talked about, in the weaker relief rallies each and every time. We used to get decent relief rallies that would at least come up and test the 200-day. But Bitcoin time and time again has had weaker and weaker recoveries. We turn off the drawings, you can see it ever more clearly, and we are getting more and more distant away, not only from the 200-day, but also the 200-week, a first in Bitcoin's history. And when you take a look at that market order flow, it doesn't look pretty. If we simply zoom out here, take a look at that weekly market order flow, yet again, another week with a cumulative volume delta here on our partner tool Bookmap, which is one of our partner tools. It's really exciting because it can give you a lot of insights outside of just analyzing price into the market order flow. Who is demanding to either, are we essentially getting more buyers taking the best available price or more sellers at the best available price? That's what you got to ask yourself when it comes to understanding market direction. Are people FOMOing into Bitcoin, or are they FUDing essentially? Are they getting out of their position? All this crypto lingo talk. You get the gist here, right? It's basically who's taking the best available price. And yet again, another week where the CVD is negative. We have not had, I think, for practically months or weeks where the CVD has actually been positive. Maybe back during some of those relief rally periods. But when we check it here on the macro Mondays, it's either neutral or in the red. Case in point. And I definitely recommend, if you guys haven't already, check out Bookmap. They're a really cool tool. We've got a link in the description where you guys can get a discount. But you can get access to this feature, Multi-Book, which will give you a wide range of order book exposure towards that market order flow. But the key thing that I want to drive here is that price action and market order flow are one thing. But it's not enough here to really give us a clear thesis as to 2023. And I think that's where we got to zoom out and really think about what the sentiment is right now for crypto. Because when we're asking this question, I think a very important thing that people don't think about is they think in their own mindset. They think about what they're doing at the moment, what their income potential is, what their investment thesis is. But I really try to step back and think about the broader market sentiment. And the first question I ask is, who's going to be buying? I think we need to ask ourselves a genuine question and give ourselves a genuine answer. Do we really think that Wall Street the traditional investor class is ready to go all in on crypto and save the day and buy the dip. I gotta be honest with you guys. I don't see how or why. After Three Arrows Capital, after Celsius, after FTX for that matter, the crypto contagion has shown only one thing, and that's that even the industry leaders who we were supposed to have trust in to build tools and basically a framework to interact with crypto exchanges, lending services, could not be trusted. This is more shameful on the scale of the size of crypto, more shameful than the housing crisis, than the dot-com bubble, any kind of major financial collapse in the last few decades. FTX is being called one of the biggest Ponzi schemes we've seen in history. And to be honest, what I think is just very clear as day here is what price action is telling us. I know we've been beating this like a drum. I know it's negative, guys. I don't mean to be negative, but I'm going to be realistic with you. I'm not going to sit here and lie. You guys come back to this channel time and time again because I think there's one thing that's true, which is that whether I'm right or wrong on something, I'm giving you an honest take. And that's really rare in today's world when I think people just chase constant monetization and try to get you attached and emotional in the market and chase your emotions and your actions, right? Price action looks absolutely terrible right now. And I say that as someone who has traded and invested, learned from my mistakes over the last 11 to 12 years investing in financial markets. I cannot tell you guys in good faith that this looks like a good chart. I can't tell you that the contagion is over in this space. And I certainly cannot tell you with any degree of confidence that crypto institutions or institutional investors are going to be investing in crypto. And that's why I think when I look at the ETH to BTC ratio and how much we've been holding up in this heightened pattern against Bitcoin, right? Put aside that, let's just take a look at the dollar values here. Constant lower highs and lower lows on Ethereum. BNB, right, which was one of the more stronger players throughout 2021 and 2022. Take a look at the monthly or weekly. Just looks abysmal. This looks like it's ready to fall off a cliff here. There's no upward momentum of higher lows and higher highs. And that comes at a time here as people are worried that BNB may potentially be listed as a security, barring it from being able to be listed on a lot of US exchanges. Right? And again, we've been actually quite subtle here around the Binance FUD in the space. I don't know if a lot of that FUD is genuine or justified whatsoever. I don't see any problem with withdrawing your funds off exchanges, but at the same time, Binance, I think, is up there with Coinbase to a large degree in a lot of ways, and almost fits into that tier of Coinbase, Kraken level exchanges, like really the decent ones that you can always have a high degree of trust in. But again, BNB token is not looking good. The value, supposed potential of Binance Smart Chain does not look good. And when we step out of the crypto space, I think we really find our answer for crypto when we look at the macro sphere. And that's where we stand out on this channel. A lot of people just focus in on crypto. They focus on next latest greatest altcoin or trending crypto, NFTs, DeFi, and how great it's just going to be. But what you really need to do is understand the broader macro flows of capital. And look no further. If you had to look at any area of the market, you can look at what the Fed's doing. You can look at all these different metrics, economic data, whether or not we're in a recession or depression. Key thing is to take a look at equity prices. U.S. stock market. And let's just take a look. Let's run through these charts here. We got the NASDAQ rejected at its 200 week, which used to be, over the last decade, the buy the dip opportunity. Every time we came here to the 200 week, the orange and red line, that was your opportunity to buy stocks at the best discount. Those that were market leaders, which are now serving as market laggers. They can't even maintain support at the 200 week, and they sure as hell aren't coming up like they were over the past couple of months to retest that 200 week, which, bear in mind, is at a much lower price range as it has been trending down since Q1 of 2022. S&P 500, yet again, another deviation right as it passed the 200 week, the perfect opportunity to close positions and start shorting. And week by week by week. It has been red and red, and it looks like we are coming right back down to see whether or not the S&P 500 can hold on that 200-week like it did before. If it snaps through there, if it cannot hold that range of support, you've got a great thesis for this pulling, not just a March 2020 collapse, but potentially having a 2008 style collapse. As we've highlighted, the relationship between the 200-day moving average and the 200-week are very important, and this has played out time and time again through previous bear markets. And if that is the case, it could very well mean that we are far ways away from finding the absolute bottom. Perhaps it's not going to be as brutal as 2008. Perhaps it won't be as brutal as the dot-com bubble. I'm not here to say that. What I'm here to say, though, is that the charts are at least telling us we've got more pain to come. Dow Jones is doing exactly what it did during the dot-com bubble, showing more resiliency and strength as these are the more well-established defensive plays. But yet again, getting shot down at consistent resistance, deviating exactly as we pointed out here back in November of 2022. And yet again, more red weeks here. If this breaks below the 200-day, we're at a minimum likely going to come down to test the previous lows, if not break to new lows. And that is going to weigh down markets big time. But a lot of people have been asking me, Nick, are you being a bit too bearish here? Are you a bit too concerned about things? Are you thinking too much in a negative light? I think there are a lot of clear weakness signs across the board on equities. First one here is from some of the financial players. Credit Suisse. This has started to fall off a cliff yet again. In August, we broke through a decade-long descending channel. So this already gives Credit Suisse, one of the weaker financial banks in the system, already some degree of support on its stock price. That level has been broken. And that was a descending channel. And now it has rolled over after it was clear that the Fed is not pivoting, that Credit Suisse is likely in trouble. And they're even after, going after bloggers and things like that for spreading FUD, this and that. Case in point, I'm not here to say anything specifically about the company. I'm just here to say stock price doesn't look good. It looks like it's heading south, as it's been doing so since back in November of 2021. Now this is, bear in mind, a multi-billion-dollar financial entity. So that is not good news. But on top of that as well, not only are there players that are showcasing signs of weakness in the financial sector, but in technology, some of the big stocks and plays that were leading the way forward in 2021 and 2020 and over the past decade in general, like Tesla, are down over 70%, and they are in absolute free fall right now. I would say until Tesla comes down here towards around an 85-90% correction, it's not over. It's not over just yet. It could happen sooner rather than later, but I'm not going to fight the trend. No one's buying at these levels. Until I see some kind of base out here in price and sign of potential trend reversal, I'm waiting on the sidelines. And I'm not trying to just scuff Tesla here. All the major EV manufacturers out there, the automotive sector in general, is looking incredibly weak right now because there's a massive dilution of not only used cars, but also new cars on the market. Demand is dropping. The Fed's hikes and rates are working. Apple as well, starting to showcase some really worrying signs here. Apple cannot reclaim that 200-day, and it cannot hold the 200-week. We are in for some serious pain because, as we can see, the 200-week used to be the defensive layer here for Apple. I think at a minimum, we've got a chance to do what we did at least in 2008, where we come below that 200-week. That's when I might start getting interested, but we are not there just yet. And to put it in perspective, Apple goes down there at current rates. That will take Apple's share price from $131 to $107. Percentage-wise, that's not entirely bad. But when you consider the market cap ramifications and the weight that is going to have across the board, that is hundreds of billions of dollars. In fact, it might even be close to peering around $1 trillion in valuation decline. Not good for Apple. Not good whatsoever. This has been the strongest player in the FANG stocks. What is that going to mean for Meta? What's it going to mean for Netflix, etc.? And as we'll learn later on, what does it mean for Bitcoin? Okay. And last but not least as well, one of the other sectors that two sectors that I'm worried about, we wrote about in the Dash report for a lot of months now, is the airline industry and the cruise lines. Both of them getting rejected at their 200 days and looking like they're ready to fall off a cliff and have their capitulation wave, to go through bankruptcy, to go through restructuring, or potentially these industries will be saved to some degree. But we need to go through that wave of capitulation and fear before we can really start to talk about crypto setting a bottom. And that's the key point in all this, guys. I don't want to ramble on for too long, but I want to bring the close in here, which is that crypto alone itself is not looking very good. The macro picture is not looking very good. I think we, at a minimum, need to wait until Q1 to Q2 of this next year before we can realistically look for any lows, where the Fed is slowly but steadily starting to get towards that 2% inflation target. There is going to be some businesses who do not survive this. There are going to be a ton of altcoins that today have value that will not have any value, or practically none whatsoever, a fraction of what they used to have. And people are feeling the pressure right now. That's what's typical within a wave of capitulation. That's what happens in the bottom of the bear market. And then after that, you have a period of sideways consolidation, accumulation. The big players providing the base liquidity and buy-side pressure to be able to send prices higher. And who knows, maybe Bitcoin doesn't go much lower. I'm not here to say that it's going to absolutely collapse to zero or anything like that. I'm not stupid. But the key thing here that I want to emphasize is that we have to be patient. There's no reason to chase it. We could very well have Bitcoin go sideways, and you'd have the same buying opportunity a year out from now that you have here. Or more likely than not, we are going to have lower prices from where we are here today. And if you're like us, where you took profits back during the last relief rally, and say we get $12,000 Bitcoin, we get to double down on our positions. We get to be twice as exposed as we were before in regards to the real position size. Looking back over the last year, I'll admit one thing, which is that we didn't time the top as well as we should have. We got caught up in a lot of the euphoria that a lot of people got caught up in, which was that when we broke back to the previous all-time highs, we were expecting that we were going to go on towards 100K. The price was basically at a foundation where, after setting the base foundation here in June of 2021, that we could start to trend higher. And to be honest, we got that call wrong. But what we did do is not continue to get stuck behind in that lagging position. We took advantage of the relief rally. We sold at the peak of that relative strength at 24K. And since then, it has been really beneficial for us from an investment perspective. And I'm going to continue to try to do my best here on this channel to keep you guys informed on where we see the market going and try to give a realistic picture, a non-biased one, about just trying to feel the sentiment in the room and figure out where things really could be heading. Anyways, guys, if you enjoyed this video, one of the greatest ways you can do to support the channel is to drop a like. I know I ramble a bit, but if you've made it this far, hopefully you're enjoying my rambling. Hopefully you're getting something out of it. You can also share it with family members, your friends. It's a great way to get the word out. But yeah, anyways, guys, thank you all so much for watching. As always, thank you for giving me some time out of your day. And until the next video, stay positive. We're going to get through this, and we're hopefully going to be figuring out the best opportunity to enter into the market. Stay tuned, everyone. I'll talk to you all in the next video.